and welcome to InstaForex's financial news channel. I'm Marina Generalova and here is our weekly stock market review. The US stock market ended with gains last week amid slow trading on Friday, but it was still enough to record fresh highs for two of three main benchmark indices. The S&P and Dow Jones hit new records. Nevertheless, investors' reaction to the latest US employment report was muted. The S&P closed a bit higher at a new record level of 2,031.92 points and advanced by 0.7% over the week. Dow Jones Industrial Average inched higher by 19.46 points to settle at the level of 17,573.93, with a weekly gain of 1%. At the same time, the Nasdaq Composite dropped by 5.94 points during Friday's session to the mark of 4,632.53 points and was flat on the week. The US economy added 214,000 jobs in October, while the jobless rate fell to 5.8%. Although the number of jobs was below the consensus of 243,000, the upward revision to the previous 2 months more than made up for it. Federal Reserve Chairwoman Janet Yellen and her colleagues continued to prepare the market for a hike in interest rates. The New York Fed President William Dudley said rates are likely to be raised next year, as many market experts predict. Among the companies with noticeable movements of quotes on the market, shares of media giant Walt Disney slid 2.2% after the company reported that its profit fell short of expectations. However, the revenue increased. Walt Disney said its earnings soared by 7.5% in the final quarter of its fiscal year, fueled by higher incomes at the studio entertainment and media networks divisions. Revenue slightly beat estimates, but the corporation's shares slipped about 1% after hours. In the quarter ended September 27, Walt Disney received a profit of $1.5 billion, or 86 cents a share, up from $1.39 billion, or 77 cents a share a year earlier. The company earned $12.39 billion in sales, which was 7% higher than the previous figures. Analysts polled by Thomson Reuters expected per-share profit of 89 cents and revenue of $12.37 billion. Meanwhile, Zynga stocks rose 3% after its third-quarter financial results were in line with Wall Street anticipations, and sales turned out to be slightly upbeat. On Thursday, Zynga Inc. reported a third-quarter loss of $57.1 million, or 6 cents a share, on revenue of $176.6 million, compared with a loss of $68,000 or break-even on a per-share basis on $202.6 million in sales in the same period of the last year. That result met the estimates of economists polled by FactSet. Zynga shares went up by over 7% in after-hours trading. You were watching Stock Market Review from InstaForex TV. Bye and have a great day!